It's a Technically Speaking Tuesday with Jim Wyckoff, but before we get to that, Kitco News is headed to the LBMA in Rome next week. Here's a preview. Let's talk gold and silver now. Jim Wyckoff joins me. Jim, thanks for being with us.
Hi, Danielle. Always nice to be with you.
Jim, we caught up with you last week right after that news came out that there would be no taper for now. We obviously saw gold rally. It has since retreated. It is now down for a third straight day. Was gold just ahead of itself last week, Jim?
Well, Danielle, I think what happened was you saw that rally last week in the immediate aftermath of the Fed news with the no tapering situation. I think the sense of the marketplace quickly became that there was no tapering announced at this meeting in September, but it could well be at the October meeting or at the December meeting. So it looks like it could still be on the table yet this year, and that was corroborated by New York Fed President Dudley on Tuesday morning that said that it is a possibility. Daniela, the Fed officials recently have been saying that the timing of the tapering is going to depend on economic data. And right now that economic data has not shown the U.S. economy to be strong enough to be weaned from the monthly bond buying, according to the Federal Reserve officials.
On the other side of the spectrum of no taper, Jim, is ECB President Mario Draghi, who said on Tuesday that if needed, he will flood banks with cheap money. But this not helping gold, Jim. Why?
Well, Daniela, I think you could see a delayed reaction to that. I think you can take the Draghi and the other European Central Bank officials' remarks two ways. The remarks today, Tuesday, did put some downside price pressure on the euro currency, and that may have been near-term bearish for gold. But on a longer-term basis, flooding or injecting more money into the economic system is going to be potentially inflationary, and that could be a bullish longer-term development for the gold and silver markets.
We also saw a lot of data come out from the U.S. today. Jim, what are you seeing on the U.S. front?
Well, we're seeing more ambiguity on the economic front in the U.S. We see a strong report here, a weak report there. We're just not seeing the kind of sustained strong economic data that I think the Fed wants to see so they can pull back on their tapering. They're just seeing fits and starts. And if this keeps up, if this pace, this one step forward or two steps forward, one step back economic growth in the U.S., I think you could see the quantitative easing and the $85 billion a month bond buying continue longer than the marketplace might expect right now. And that's basically what the Federal Reserve said at last week's meeting.
All right, Jim, let's get to your Wyckoff market rating for gold and silver this week.
Daniela, we've resumed 4-week-old downtrends on the daily charts for both December gold and December silver. I'm giving both of those markets a Wyckoff market rating of 4. That is in the bearish camp. For December COMEX gold, we've got resistance at last week's high of 1375.40. Got solid chart support at last week's low of 1291.50. For December COMEX silver, we got overhead resistance at last week's high of 2344.5. Solid technical support at last week's low of 2122.5.
Fantastic, Jim. Thanks for being with me.
Can't wait till next time, Daniela. Bye-bye.
And thanks for watching this edition of Technically Speaking. Email us, newsfeedback@kitco.com, or you can follow me on Twitter @Daniela Cambone. Thanks for watching.